Good day traders, I hope you're all well, and today's video is going to be basically based on risk management. So before we get into risk management, I just want to talk about the importance of it and how it can actually change your trading. So risk management, I've seen so many people in the past put £1,000 into their trading account and start trading thinking that overnight they were going to be successful, and overnight they were going to be basically making thousands of pounds. In trading, that's not what it is. Okay, in trading, what it is a slow process which allows you to compound your trading account. So compound meaning that using small lot size, you should be able to accumulate funds into your trading account. Okay, slow and steady wins the race, as you've all known and you've all heard. So looking at USD CAD, first and foremost, let's just break this pair down. We can see that price action right now has it's been in some sort of a downtrend where price action started off these highs, made the lows, the lower highs, again new low, lower high, not being able to make a new low, and then instead creating a higher low, and then price action started to trend to the upside, creating high highs, higher lows, higher highs and higher lows, creating another high and a higher low, looking like price action could potentially push up and come on retest a psychological number of 1.33500. That's what we're seeing right now, and this 1.33500 also lines up nicely with this area of resistance, and we could see a bullish move and a final push up to the upside before price action could potentially reverse, as it would have created an A, B, C pattern before D extension to take out these lows if it wants to. Okay, so there's also a reversal pattern within this region. What that I can see there's a head here. We can also see a nice inverted shoulder here, and where we can see price actions used it as an area of support, broke, came back up again, used it as another area of support, and now we're seeing this bullish move in this area being now the neckline, the 1.33500. So it's another reversal pattern which suggests that we could see a bullish move to the upside. Okay, so with all of that being obviously so obvious here on the daily time frame, let's go to the 4-hour time frame and see what price action has got in store for us. Okay, so on a 4-hour, we can see that price action, just understanding structure, understanding the waves that price action is moving, we can see that price action has obviously used this area as an area of support and making this impulse move. Once the impulse move has occurred, we've had an area of retracement. Again, we've had another impulse move and then an area of retracement. Okay, so all we've done is we've moved in one wave, pulled back, second wave, pulled back, and we've got one last wave before the market either exhausts or the market starts to consolidate before either trending again in the same direction or consolidating whilst creating a reversal pattern, and we could see a downside move to back all the way to 1.31. So let's just see what we could do here. We can start to use our Fibonacci tool. This is a tool that's basically used in order to measure the retracements to see how much price action really retraces in terms of percentage, how much it corrects itself before obviously creating the next impulse move, and then exhausting, correcting itself, then creating the impulse move. So we can see that we've made the first A, B, C pattern, A, B, C, D pattern, then now making this A, B, C, D pattern, and now we need to see what happens here. So measuring from A to B, so A, B, we can see that we've retraced the 50% before making the next move up, hitting our first target. So A, B, C, D, target was hit. So we know this is A, B, C, D. So A becomes B, so this is now A, and B becomes C, so now this is B, and C becomes D, so now this is C, and then now we see the retracement. So let's do that again. A to B, B to C, C to D, D to E extension. Okay, perfect. So what I'm seeing right now is price action do this. We can see that price action is now come back, retraced, made a move up again, pull back 50. Now we're seeing if price action can move higher. You can see what's happening here. 618 rejection. Okay. So it's very important to understand your Fibonacci tools and how they can identify your areas of support and all areas of resistance. Okay, so with this impulse move, I'm going to measure it and wait for the area of pullback, the area of pullback. What does that line up with? The 38 lines up nicely with an area of resistance, so does the 50. Okay, so now I'm just going to highlight my zone, and in that price action, as long as it sustains above, we could potentially push higher. If we do break below and we'll get a retest, we could be pushing lower to equal these lows. So both scenarios I know and I understand, and I'm always looking left to see what price action has done previously, and if these areas have been tested in the past, which they have, and have they been able to hold, which they also have. So now I'm looking for price action either to break it or retest it. So I'm going to be very crucial up here as well. Up here, I'm going to be looking for rejections to occur. So anywhere within these regions, I'm looking for price action to either reject and we could see a move lower, or I'll be waiting for price action to break above, retest, and then we could see a continuation of the upside move, and we could revisit these highs up here as 1.3200, 1.34 level. Okay, that entire zone here where we've had the supply of this entire move. So we could revisit those regions as well. So that's what I'm looking at, okay? So on a 4-hour time frame, I can also see candlestick formations. That price action that came in here with bearish engulfing, then another bearish engulfing to the downside. However, the Friday in the evening time, as we had a 4-hour closure around 6, we've had this massive bullish engulfing to the upside. Okay, the reason why we've had this massive pushes to the downside, it was all because of the fundamentals that had occurred on Friday. We had core retail sales and retail sales for Canadian dollar, which came out extremely positive. So that resulted in inflation, and that's basically a very good indicator for inflation in Canada. So because we understood what's happened, we saw that price action had made a dramatic move to the downside because of that positive Canadian news over the dollar. And obviously we've seen that move to the downside, but in order for it to continue, we should have broke the structure, which we haven't. So now I'm looking at this structure holding as an area of support. It's clear it's an area of support because we saw this massive bullish engulfing. Price action can come back and retest this whole region here one more time. I'm going to explain why on a smaller time frame. Then we could look for price action to push up higher. So on a 1-hour time frame, you could see why we're looking at this area. This area was a good level of resistance, and now we've broken above. Can we come back and use it as an area of support? If so, then we could expect a massive move to the upside. Like I said, A to B, the highest point, C retracement. You've seen that we've tapped the 50, pushed above the 38 as well. Can we come back and either use the 38 as an area of support, or can we come back into this zone and then reject and go higher? And we could look for price action, like I said, to come to the minus 27.20, which lines up just above that resistance. So looking for a trade tomorrow, something like this to the upside, about 84 pips, and potentially risking about 30 pips to the downside. So if I do get in somewhere here, my stops will be just below the structure here, so about 37 pips. So now I know my analysis, I know what I want to do. So for example, let's just say that I've taken the trade. I've taken the trade and my target is 81 pips and my stops is just below here. So let's just say 33.1. How do I know what lot size to put on? Okay, this is very important. How do you know which lot size to use? So what I've done is I've went on to my FX book, and my FX books has a calculator. And this calculator allows you to put in your account size, put in how many percent you want to risk, put in how many, put in your stop loss position, as in like calculating how many pips you want to put as a stop loss, 40 pips, 30 pips, 20 pips, and then the currency pair that you want to use, and then obviously it will calculate which lot size you should be using. Okay, so in this case, we're going to find USD CAD. Bear with me. So USD CAD. Okay, let's just say we've got £1,000 account. We want to risk 1%, and we're using 33 pip stop loss. Now this is going to calculate which lot size I should be using. So it's telling me I should be using 0.052. So yeah, I know that you can't do 0.052 on MetaTrader 4, so I should be using 0.05, only risking £10 per £10 in as a stop loss, an account size of £100. So therefore I should be looking to gain anything more than my stop loss. So for example here, we can see that we're looking to gain potentially 2.47. So it means I'm risking 2% to potentially gain 4%. Okay, so it's not a bad trade. It's a good trade, and it will obviously, if it goes your way, it will obviously accumulate your account. But if it goes against you, it will obviously not hurt your account, as you're only risking 1%, and that's already been calculated how much you're potentially looking to lose. Okay, so this is very important for you guys to understand, and it's very, very crucial because it will stop you from blowing your account. You need over 100 trades for your account to be blown if you're using 1% strategy in risk management. So yeah, so you're gonna need 100 trades, and there isn't a trader that I know that's lost 100 straight trades. So, and if that's occurred, then obviously you're having a bad luck or your strategy isn't great. But if you use this risk management strategy, you will obviously gain more than you lose. So your account will always accumulate, your account will always compound. Anyways, I hope you enjoyed this 10-minute video, and I'll catch up with you later. Peace.